Another tough day for Wall Street, but how is Main Street doing? Here to tell us is the CEO of Sageworks, Brian Hamilton. Mr. Hamilton, thanks for joining us.
Great to be here.
And welcome to Opinion Journal Live, by the way.
Great to be here, yeah.
This has been kind of a puzzle over the last year or two, figuring out how healthy Main Street companies are. When are they going to start hiring? Unemployment still above 9% or hovering around there. And first, I wanted to go over a chart. This is from not from your organization, but from the National Federation of Independent Business, and it's their optimism index.
Right.
And generally, what it's showing us, not very good news. It's down, and specifically on plans to increase employment, on those that think this is a good time to expand.
Right.
Very depressing numbers. Single digits on a lot of these, sort of measurements of bullishness on whether people want to pull the trigger on new investment, on hiring people. This is looking at the smallest businesses.
Sure.
Your universe, these are companies that are served by banks, and banks share the data with you, not the names of the companies, but they share the data. Which companies are you looking at, and what is it telling you about the health of these companies?
We look at the 27 million companies that are privately held, all sizes, and there is no question in looking at our data, and remember, we have between 700,000 and 800,000 firms. It's a lot, right? It's a big size. There's no question that over the last 12 months, revenues are up, net margins are up, net profits are up. Now that's distinctly different, James, from a couple of years ago when revenue was down about 4%, which had cascading effects, negative ones, throughout that world. Now keep in mind too, there's 27 million privately held companies. There's only 5,000 publicly traded firms, yet 80% of new jobs are created by these privately held companies. But the State of the Union is very positive. In fact, and this is an interesting poll because it's been very interesting to us that the gap between kind of what's really happening and what people feel is happening is still quite wide. So of course the big question is, when are people going to hire?
Right.
And really it's when that gap becomes lower or smaller, you know what I mean?
Well, we've seen the same thing on the public side. What we see in public companies are profitable firms sitting on a lot of cash, seemingly in a very good competitive position. They got lean and mean after the downturn. What you're saying is you look on the private side, the whole universe of U.S. companies basically, and you see very profitable, very healthy businesses, but I don't know if you can measure optimism from your index.
Here's the thing. I think it is probably a case of once burned, twice shy. Meaning a couple of years ago, remember the people who run these companies have mortgages to pay, kids to put through college, credit card debt, but they definitely got burned a couple of years ago. So I don't know if it's just politics that are, people are sitting on the fence. The Democrats blame the Republicans blame the Democrats. I don't think it's just that. I think it's that people are a little bit nervous about what's going to happen. However, if you look up throughout American history, when revenue goes up over time, companies do hire. And by the way, one last thing, there is a historical precedent. For example, in the early 1970s, there was a 33-month lag between GDP growth and hiring. We're at about 18 months. So what we're going through right now has happened before. Hopefully, over the next 12 months, conditions will increase. But no one really knows why these companies aren't hiring. Okay,
well, you mentioned the 1970s, and we would point out now, offering our opinions, that a big parallel between the 1970s and today is a lot of uncertainty from Washington, a lot of bad policy from Washington, causing a lot of fear in the business community, reluctance to hire. But leaving aside, I assume you don't opine on that kind of thing. You tend to look at the data. This question of whether it's banking, for example, whether it's a lack of loans to small businesses or whether it's a lack of demand, this NFIB data has said to this point basically it's lack of customers in the door and fear among their members of debt in Washington.
Well, we know they have customers coming because the revenue's up.
Right.
By the way, I'm going to backtrack just a little bit.
Okay.
I don't think the uncertainty in Washington is helping matters. I think the divisiveness is profound right now, as you know, and so it's probably not helping things. However, the demand is definitely there. There's no question in this realm that sales are going up. So As that continues, these companies will hire people. Now, the big question is when and what's going to make that happen. Well, of course, that, that
that's
becomes
what I'm
the
wondering.
debate.
When you look at history, based on that 1970s
Sure.
experience, do you look at the data you're seeing and say, therefore, a big rebound is inevitable, a skyrocketing in the in hiring is inevitable, or could we bump along like this where the companies remain healthy, but people aren't employed because the companies don't want to hire?
All right, so this is opinion type stuff. So
Fair enough.
All right, here's the thing. If you're running a company and your revenue's increasing, and you're getting more customers, and you're more profitable, at some point, let's say you don't want to help America, okay? We don't want to create jobs. It doesn't really matter, because at some point, you can only get so efficient where you're going to have to start hiring people. We just don't know exactly when. So that, that's the big issue, you know what I mean? So you've got 27 million companies out there making private decisions, they're running companies, and as their revenue goes up, they will hire people. Now, there are some people who say this is just going to be a jobless recovery, things are never going to get better. I'm not a buyer on that, I'm really not, because historical precedent is just not there. Forget about the 1970s, go back to the 1870s. When revenue goes up, when profits go up, when net margins go up, companies want to make more money, they want to grow business, they want to grow market share. Even small companies, they'll hire people.
Okay, so this would be an argument for the natural healing powers of the economy, no matter what they do in Washington.
Well,
although you can't really say on the timing.
Well, wait a minute. One thing. This is an interesting point. I think there are things they can do in Washington to throw a grenade at the recovery and slow it down. No question.
Right.
There's no question about that. In other words, I want to be really clear.
Yeah.
I don't want to get into the positioning aspects of this, but the people who run private companies are very practical, right? They're making these decisions. Many of them are majority holders in the companies, right? It's really simple at the Washington level to me. If you introduce legislation which is going to increase their costs, now you could be affecting their propensity to hire people. This is common sense. It's just basic stuff. Why Washington's not tying it into this, I don't know. We go back to the healthcare debate and all that. Anything we do that's going to increase costs for those companies are going to make them reluctant, because then you're introducing uncertainty, not to their profitability, James, and their stock price, but to their pocketbooks, or to their wallets.
And we would conclude from that more taxes, more regulation are not the answer. I know you're looking at the data here, but just to clarify, as we're saying, we're sort of waiting. We're looking at these companies very healthy. We're wondering when are they going to either kind of naturally have to start hiring, or when will they choose that it's the right environment to start hiring? Just in terms of how healthy they are, I don't know how far back your data goes, but can we put in context in terms of profitability, margin, just the financial condition of American businesses?
Tough to do. We've been tracking data for about 13 years. Right now, we're back to normal levels of profitability. We've got between 4 and 6% revenue growth across these 27 million companies. That's a lot. That's a real lot. But you got to remember that 2 years ago, in 2009, it was a 4% decrease. And when revenue goes down by $1, profits don't go down $1. They might go down by $10. So, again, once burned, twice shy. They're on the fence. We don't know when they're going to start kind of pulling that trigger. And the advice to Washington right now is just very generic. Any policy that you're going to introduce, just think really hard about how it's going to affect those 27 million independent decision makers. And quite frankly, Washington, has been a little bit sloppy on that over the last 2 or 3 years.
That is for certain. Now, you are a Duke graduate, I understand. Coach Krzyzewski setting the all-time record. Is this the positive signal that the markets have been waiting for?
I think look,
time to jump in.
The whole world, the axis is turning right now. Everything's going to be better. By the way, my son goes to Carolina, so I have to be careful.
Oh, okay. Well, a lot of good ball there on both sides. But thanks, Mr. Hamilton. Thanks for joining us.
Great to be here.
Please stay with us. We're going to come back with a preview of tomorrow's Wonderland column in the Wall Street Journal. Thanks.